Right, today we are going to decode one of the most powerful little signals in all of technical analysis, the Doji Candlestick. It's just a single candle, but it screams market indecision. And trust me, by the end of this, you'll know exactly how to read what it's telling you. Let's get right into it. But first, just think about this for a second. What if one single shape on a chart could give you a massive heads up that a big reversal is about to happen? Well, that's pretty much the power of the Doji. It's like a little secret message the market sends you saying, hey, pay attention, something's about to change. So to really understand this signal, we first have to get right to the heart of what it means. And what it means is pure, unfiltered market indecision. At its core, a doji is actually super simple. It's just a candlestick where the price opened and closed at almost the exact same spot. That's why the body is just a tiny little line. But see, the real story isn't in the body. It's in those wicks or shadows that stick out. That's what tells us what really went down during the day. I want you to picture a perfect tug of war. During the trading session, the buyers, the bulls, they grabbed the rope and pulled the price way up. But then the sellers, the bears, fought back and dragged the price all the way down. But here's the thing, by the time the bell rang, neither side had won. The price snapped right back to where it started. It is the perfect picture of a market at a total stalemate. Okay, now let's get into the specific types. In this first one, well, it has a pretty dramatic name for a very good reason. It's called the Gravestone Doji, and it is a major warning sign from the bears. And this picture tells the whole story, doesn't it? That super long wick at the top shows that buyers tried with all their might to push the price higher, but they just couldn't hold it. The sellers came in with so much force and just slammed the price right back down to where it began. So here's the key takeaway. When you see a Gravestone Doji pop up after a really strong uptrend, that is a huge red flag. It's a classic bearish reversal signal. It's telling you that the bulls are exhausted and the sellers are now in control. You know, the source material puts it perfectly, and I just love this quote. Rest in peace, this stock, you're going down. I mean, that's the powerful feeling this one little candle can give you. It's often the last gasp of a bullish run. Now let's flip the script and look at its total opposite, the Dragonfly Doji. This one signals a potential bullish reversal. It's the hero to the Gravestone's villain. And visually, you can see it's the perfect mirror image. That long lower wick tells us that the sellers did their absolute best to tank the price, but the buyers stepped in with incredible strength and they rallied the price all the way back up to close near its high. So when you spot a Dragonfly after a long, painful sell-off, that's like a potential green light. It suggests the stock is finally finding a bottom, support level. It's a sign that the bears are running out of steam and the bulls might be ready to take charge. And that brings us to our third type, the standard doji. You might also hear it called the long-legged doji. This one represents the ultimate stalemate, a real true battle between both sides. Just look at the shape. It's like a plus sign or a cross, right? It's got that long upper wick and a long lower wick. This shows that both the buyers and the sellers showed up in a big way, pushing the price all over the place before it finally settled right back in the middle. What's so interesting here is just how intense that fight was. It wasn't a clear win like with the Gravestone. In this case, buyers pushed up, then sellers slammed it down, and then the buyers fought all the way back to make it a draw. It's extreme indecision, and it can still signal a major turning point at a top or a bottom. Okay, I need you to lean in for this next part because it is absolutely critical. A doji all by itself is just indecision. Its location on the chart is what turns it into a powerful, actionable signal. Context is everything. So, if you remember one thing, remember this. A doji at an extreme. I'm talking the very top of a huge rally or the very bottom of a steep crash. That is highly significant. But a doji that shows up when the market is just chopping sideways, it's not really telling you anything new. Because the sideways market is already indecisive by nature. You need that contrast for the signal to really pop. Okay, let's put this into practice on a real chart. The source material calls this the pinball effect, and you are about to see exactly why. It's like watching the price literally bounce between these key reversal points that are marked by dojis. Okay, look over here on the left. The stock has been tanking. 7 straight red candles pushing the price down. And what stops the bleeding right at the very bottom? A perfect Dragonfly Doji. This signals the sell-off is over and kicks off a massive V-shaped reversal to the upside. And what happens when that rally gets going? It runs up and up. And then, boom, another doji, a gravestone this time, appears right at the peak. And just like the textbook says, that marks the top. And the price reverses and heads back down. It's a perfect example of these dojis acting as pivot points. So to wrap this all up, here is your simple 3-step checklist. First, find a clear trend. Is the stock moving strongly up or down? Second, spot that doji right at the extreme end of that trend. And third, wait for the next candle to confirm the direction of the reversal. That's how you spot a real signal. You see, the doji doesn't predict the future. It shines a big, bright spotlight on a critical moment of hesitation in the market. It tells you when the battle between buyers and sellers is at a perfect balance. So now that you can see that indecision clearly, there's really only one question left. What's your next move?